Hello and Assalamualaikum everyone. So my name is Iza Musfira Minti Muhazi and I am from AC11026. So today I'll be presenting about topic accounting and other business enterprise. So in this topic it have three subtopic, which is manufacturing account, branch, and also accounting for non-profit organization. So as we can see in here, what is manufacturing account? So manufacturing account is an account that used by businesses that makes their own product, which is the finished good, and they use it to calculate the total of production costs of finished goods. So next, as we can see, what's the differences between trading business and manufacturing account? So first, based on nature of activity, trading business, they buy and sell finished good, but manufacturing business, you need to do it from raw materials to finished goods from A to Z. While for the type of inventory, trading business only have one finished goods, while manufacturing business, you need to have raw materials, work in progress, and finished goods. For determination of cost, for trading business, you need to base on buying and selling, while manufacturing business, it have materials, labor, and also overhead. For determination of selling price, trading business, you calculate it as cost plus profit, while manufacturing business, you need to calculate manufacturing cost plus profit, and you can get the selling price. While the financial statement for trading business, you have trading, profit or loss, and financial position, while manufacturing business, you have to add manufacturing account to all above. Next, what's the elements of manufacturing cost? So we have about 2, 4, 6, 7. So we have like 7 elements, which is the first one is the prime cost. What is prime cost? Prime cost is a main direct cost in the production process. For example, direct materials, direct labor, and also direct expenses. For direct material, it is a raw materials used to make the actual products, such as flour, eggs, and sugar if you want to make a cake, because without them, you can't even make the product. Next, we have direct labor, which is a workers who directly make the product, which is a skilled workers in the production, and they will be in touch with the product and they will directly in touch it. Next, we have production overhead, which is indirect costs during production, such as indirect materials, indirect labor. Next, we have indirect materials. It is a materials with small costs that support the production, such as screw, nails, glue, or lubricants for the machine to process the product. Next, we have indirect labor, workers who are not handling the materials but needed in the factory. For example, we have like supervisor to supervise your activity to make the product. And last one, we have indirect expenses. It is an expenses to run the factory that can be directly linked to the product, such as the factory rent, utilities, and also the depreciation. Next, we have work in progress, as known as WIP. So what is WIP? It is a goods that are not finished yet, which is maybe half finished or partially finished. It can be value either prime cost or production cost, and you can adjust for opening WIP and also closing WIP. Next, we have factory profit, also known as manufacturing profit, and it can calculate it by applying a fixed markup on manufacturing costs of goods produced, and also market value of goods produced minus manufacturing cost of goods produced. Next, we have AFO, which is allowance for unrealized profit. So it is an adjustment that made when you want to close the stock. Its value at the market value includes some factory profit, but goods are not sold yet, so it is actually not real. So we must deduct it from the account since it is not real, to show that the true profit of our business. So as we can see here, this is the format that we're going to use to calculate the AFO, which is closing inventory of finished goods over 100% 100% plus percent factory profit or markup. and you can time it by percentage of factory profit or markup. Next, we have branch accounting. So what is branch accounting? Okay, as we can see in here, the first one is branch and head office. A branch is a part of the main businesses, which is the head office, that operates in a different location to help the company to increase the profit and also to increase the sales, while still being responsible to society. And next, we have types of branches. We have two types of branches, which is the selling agency branch and also autonomous branch. So what is selling agency branch? It is known as dependent branch, while autonomous branch known as independent branch. So for autonomous branch, it keeps a full set of accounting records, and the records of the copy of the records will be sent to their head office. And next, we have current account. What is current account? It is to record all the transaction between head office and also branch, and you need to keep track all the internal dealings such as cash transfer, goods sent, return. Next, we have accounting for non-profit organization. So what is accounting for non-profit organization? It is also known as a non-business entity, and it provides some facilities and services for their workers, for their members, instead of making profit. So what is the example of accounting for non-profit organization? So we have receipts and payment account, income and expenditure, and also accumulated fund. Next, what's the example of income peculiar to non-profit organization? So we have annual subscription, entrance fee, life membership fee, donation, and also grants. So the last one, as we can see in here, what's the differences between profit organization versus non-profit organization? So as we can see in here, we have about 2, 4, 6. We have 6 types of it. So what's the purpose of both? Okay, so for profit organization, we create and sell the product to gain profit, while the non-profit organization is to support a cause of soft social, humanitarian, or environmental issue. So for funding, where the profit organization get the funding? They get through the revenue, while the non-profit organization, they got the funding by through the private donation, sponsorship, or from the government. Next, taxation. If it is a profit organization, you must pay the tax as required by the law in Malaysia, while the non-profit organization, you usually are exempted from paying taxes if it is registered properly. Next, we have reporting. For profit organization, you need to report it to shareholders and their investors so that they know about it. And also for non-profit organization, you must report to a board of directors or a government or a governing body. Next, for the financial statement that we're going to make for profit organization, we have SOPL, statement of profit or loss, SOFP, statement of financial position, and also cash flow statement. While the non-profit organization, we have receipt and payment account, and income and expenditure account. So for the net worth of profit organization, profit or loss need to transfer to the capital account, while the non-profit organization, surplus or deficit is transferred to the accumulated fund.